You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again on the old network live for all of our pro folks and live to tape for all of our on-demand friends for a little bit of the old Options Boot Camp. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which all of you are mainlining. No live stuff on Monday due to the President's Day holiday here in the U.S. I hope you folks had a nice long, fun, engaging weekend, got away from your screens, and now you're back, ready and raring to go. These markets are raring for something. They're on the precipice of something. It's like some big news is coming out after the bell or something. I don't know. We'll get there, of course. We'll get there in a second. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the aforementioned network. Reminding you, if you like what you hear, this show, anything else we do here on the network, throw a like, a star, a comment. It all does help. Takes 2 seconds. At the end of the day, it does help new people continue to discover the program so we can keep doing this great show that you guys have loved for over a decade now out there. And of course, if you want to love even more great content, like let's say, for example, you want to keep partying with us after Options Bootcamp today. Maybe you want to come back for a great pro Q&A with our old buddy, the director of risk himself, Mr. Chris Hausman, tackling all your topics on portfolio hedging, risk, all kinds of fun stuff. That pro Q&A is coming up pretty much immediately following this show. So head on over there, theoptionsinsider.com/pro. That's the place to go to learn more. And let's learn who's joining us on the old program today. I am pleased to welcome back on the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, how go things in the Southern Options Mecca, known as Frankfurt, sir?
Doing pretty darn good over here, Mark. Doing pretty darn good.
I got so excited to start the show, I forgot our 5-star review from this week. This is a good one. I think you're going to like this one, Dan, because it mentions you by name. This week's 5-star review comes from Sale 7, I guess. Maybe Saleh 7. I don't know. Let's go with Sale 7. He says, love this pod. Well, thank you. He says, so much great info that I'm going all the way back to the beginning. Oh, you're one of the many folks who's doing that, coming in, discovering the show sometime, let's say, in the last few years, and then going all the way back to episode 1. So you're one of the hardy listeners. If I had a cap on, I would doff it to you. He says, note, this is my favorite part. Note, need to give Dan a Mountain Dew before showtime. What do you think, Dan? You need some Jolt Cola in the old veins before the show? What do you say for Sale 7 here, sir?
Yeah, no, I'm doing good. I'm doing good. I'd like to keep my teeth from not being rotted. So
you got to lay off the cough syrup before the show. How's that?
Yeah. Okay. All right. Whatever.
All right. A little bit of fun here as we keep on rolling right on into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get into the fun. Dan, I mentioned we're going to talk about some some fun stuff that's very topical, very timely right now. But before we get there, I wanted to do a follow-up on our discussion from last week. Mr. P, you'll know, as a lot of our listeners, of course, will remember, just last week we had a fun discussion about all the madness that unfolded in LYFT, that huge after-hours move, that most of it reverted before the open again. And again, that inevitably leads to the questions of, hey, what can I, as an options trader, do in these crazy but limited to the after-hours types of moves? We walked through a variety of scenarios. We said for a lot of them, it's going to be challenging. But I was talking to our buddy, the options guy, Dan, Mr. Brian Overby, our host over there on Options Playbook Radio. He was doing a pro Q&A for our pro members after this show last week as well. And the topic came up there with him as well, Dan. And he made one suggestion that we didn't discuss on the show, so I wanted to mention it here. Again, this is another, I would say, low delta, low probability of this one working out for you, but it does technically count as an option. So you can do this, Dan. We were talking about all the different things you could do. You could hedge with the stock. Brian, as our duly appointed broker rep, did point out you can, if you're quick on the trigger finger in that scenario, if in our example you were long 10 calls, right? You can exercise those calls if you are so inclined, and then try to use that stock to sell. So we didn't mention that on the show, Dan, so I wanted to bring it up here. Again, all the caveats we mentioned last week, I think, apply even more so to that. Obviously, most brokers are going to make you call up. You can't hit a button to exercise those. So that's a challenge, because we said how easy is it going to be to get through to the broker, exercise, and then say, oh yeah, now I want to sell that stock. All in the time that move is happening, right, Dan?
Yeah, that's it could be tricky, especially depending on what time the news comes out.
Last week, I believe it was very short-lived, a lot of that upside from 12 up to 20, so you really had to be quick on the trigger finger. So yeah, again, that's the caveat with a lot of this stuff. These moves we're talking about, because we're talking about ones that are confined to the after hours, they're by definition short-lived. So they're challenging to capture even if you have the stock. So yeah, the timing factor is going to be an issue with these. But I did want to present that. Tell you what, listeners, because we like you folks, I'll have our editors cut in that clip where Brian and I discussed that on our pro Q&A last week. So you get a taste of the pro content there where we discuss that very topic. So you can get a little bit extra. I think we'll cut it in at the end of this show, just because we like you folks. Dan, does that sound nice? Does that sound charitable of me?
Aw, Mark, that's so sweet of you.
And I haven't even had my cough syrup yet today. So man, I'm in a good mood today. All right, let's get out to the topic du jour, Mr. Dan. And again, I know a lot of our listeners for this show in particular come in weeks, months, indeed many years down the road. So if you are one of those people listening years down the road, this is not going to be as timely for you, but you could probably apply it to something that is going on in your current market environment. As we're recording this, Dan, the markets are just laser focused. They're a grips. They're in a tizzy for all things NVIDIA earnings. I would go so far as to say, I've been around for a bit. I've been talking about big earnings for a while. We've talked about a lot of earnings. I wouldn't say this is the biggest one we've ever talked about, but I could certainly say in terms of laser focus on one company, this is one of the bigger ones I've seen in a while. Would you concur with that, Dan? Everyone and their mother and their mother's grandmother seems to be talking about NVIDIA right now, sir.
Yeah, man, this one is pretty up there as far as recent memory, even long-term memory. I mean, geez, man, it's been a long time since one company just had so much darn sway over basically the entire market.
You gotta think back to maybe like a decade ago, like the early heyday of Apple, right? When they were ruling the roost and carrying everything along with them. Everyone kind of hung on Apple then, but even then, I don't know if it was as intense as this. This is almost like a Fed announcement here, Dan.
Yeah, it was bigger than one, I would say.
Yeah, you could argue this is bigger than a Fed announcement. Look at the vol we're seeing right now. I mean, VIX is threatening a 16 handle right now. The market has sold off over 1% in the last couple of sessions. You could argue almost entirely on the back of concern about NVIDIA. That's off about 1/3% right now. We've been saying for a while, what's it going to take to budge VIX, right? What's it going to take to budget north of 12 or even 13, Dan? Well, I guess it was NVIDIA. Just the thought of it got us back up to almost a 16. So, yeah, you could easily, that might be a fun flash poll. Producer, if you're listening quickly, I know we have an NVIDIA poll out right now. Let's do a fun flash poll. Are NVIDIA earnings bigger than the next Fed announcement in terms of maybe more important to the market than the next Fed announcement? I'm curious. Let's see what our audience has to say. I have a feeling, Dan, a good chunk of them might agree with you. Heck, I might agree with you. I don't know. Looking at these numbers, I don't know. This is pretty. I'm hard pressed to think in recent memory of a name that we were also laser focused on. We saw big moves just in the last couple of weeks. Amazon, Meta, those people were watching those, but the entire market didn't feel like it was hinging on that, right? And now here we are. We asked our audience this, Dan. That's our current question of the week right now. We said, hey, everyone's laser focused on NVIDIA, but how important is this announcement really to the market and to your portfolio? Gave you 3 choices. Very, NVIDIA leads the market, or about as much as some other earnings, or not much, it's overhyped. Dan, I have a feeling I know where you're going with this. You said it's more important than a Fed announcement. Where do you think our audience is going?
I'm going to say that not all of them, but the majority, greater than 50%, is going to be saying that it's more important than a Fed announcement. They must have learned something listening to us all these years.
62.5% right now, Dan, saying it's very important. NVIDIA leads the market. So, yeah, they're with you. Only 20.8% coming in for the overhyped. I thought it might get a little more, but yeah. And then 16.7% saying, pretty much as other earnings. So roughly 2/3, Dan, saying it's the biggest game in town, and about 1/3 saying not so much. So I don't know. Fascinating stuff. Obviously, if you're listening after the fact, listeners, you're going to know. Maybe by the time this podcast hits the network tonight, you probably will know already the answer to this question. But it is a fascinating one. Are a lot of your mentees over there at MTM, are they all a tizzy? Are they calling up or dialing in on the old dialing in? Listen to me, like dial up. Are they all coming in on the old chat and mentoring session, saying, "Hey, let's make some NVIDIA trades"?
I mean, I have definitely had a couple of people DM me in our community chat room for sure about it.
Give us a peek behind the kimono. What's the hot thing at MTM? Are they just loading up on calls? Are they strangling? What are they doing? Puts?
No, our folks know better than to load up on calls going into earnings. I mean, it's pricing in. Last I looked this morning, it was pricing in like an 11% move, which, I mean, I go on record saying that that's not predictive of what the move should be, but it is basically what you're trading. If you're buying that straddle, you need more than 11% move. If you're selling it, you need less. So it's just, I mean, that's a tricky game. I mean, moving before the announcement, it moved like 3.5% earlier. So, yeah, I mean, the things people are looking at doing are maybe a little more strategic, looking at past gaps, trying to sell some extremely crazy rich premium out there, betting that it doesn't move more than it typically does. But I don't know. For me and for my guidance, I'm saying I think you just got to sit tight on this one. Otherwise, it's just gambling.
Dan, what fun are you if you're not buying 11% YOLO calls with 1 day to go? What fun are you, sir? You're just throwing cold water on the whole party here. You're right, though. That move 3.5% we saw just the other, that does kind of gum up the works a little bit, right? Have we seen some of the move already is the question, right? So yeah. That's a fact. Where do you fall, listener? I know a lot of you are already voting in our question of the week right now. I think our producer will have that flash poll live any second now, too, which also, again, another reason why you should be following us throughout the week at Options. You can play along, and even if you can't join us live on the Pro, you can follow along with that and make your voice heard here. Easy for me to say. Make your voice heard there as well. Speaking of making your voice heard, we did have this question of the week last week, another earnings-driven one, Dan. We asked our audience last week, both Tesla and Apple at the time, both trading around 188. I think they both have moved quite a bit away from that level now. Apple to the dark side and Tesla briefly to the upside. I'm not sure if they're still north of that level. I'll have to go pull them up. Yeah, Apple right now, 181. So the near-dated winner for that poll was Tesla. Tesla still looking better, 193, but giving up some of that upside, threatening 200, not just earlier this session, actually. So interesting. But our audience, which one would you rather buy? We said Apple, Tesla. I'll stick with crypto. That hasn't been a bad answer, looking at Bitcoin back at 1 trillion level, listeners. Or I'll stick with VIX. If you're going long VIX right now, then you're doing all right. If you're doing the contango trade, maybe not so much. 38.5%, Dan, going for Apple, which, as we pointed out, in the near term is the wrong choice. Longer term, you could argue. Tesla, number 2, Dan, 29.5%. I'll stick with VIX/vol, 20.5%, and 11.5% going for crypto. You could argue for a lot of those being good choices right now, maybe with the exception of Apple, Dan.
Yeah.
So, yeah, fascinating stuff out there, listeners. People chiming in like Beltway Greg saying long-term he's going for Tesla, 3 to 5 years. Short-term is going to Apple, 1 to 3 years. Well, Short term, it's been the other way, Beltway, Greg, but we'll see. It's only been about a week. Let's get out to some of the other questions, Dan. We got just a whole frenzy of people trying to get at us. Let's go out to our buddy, Mr. Meats, one of our pro members out there. We'll see you, I'm sure, later in the pro Q&A with our director of risk buddy, Mr. Meats. But here's an interesting question. He says, have you guys seen these crazy markets on Kalshi.com, Kalshi.com? You can trade binaries on everything from the SpaceX moon launch to who wins Best Director at the Oscars. It's wild. How is any of this legal? Dan, have you seen this? Are you familiar with this at all? This Kalshi.com and these, what are effectively binaries, but they're kind of like almost variant swaps on these types of trades, sir?
Honestly, I'm not. I mean, I've heard of it, but I'm not really that familiar with it. So yeah, I guess not. I'm looking at it right now.
Take a look. I'll set it up for you a little bit here. Yeah, because I was in the same boat as you just a little over a week or two ago. I had never heard of this, and then one of our regular contributors on the network pointed out to me after one of the shows, "Hey, have you seen this thing?" And we kind of walked through it together, and he was stipulating that he thinks they're kind of legit, which whenever I see anything that's approximating a binary, certainly on these types of markets, I always say, what is going on? But they claim to be at least regulated by the CFTC as effectively a swap marketplace for the most part. But they do have a lot of the things that we used to talk about when we used to have, exchanges like Nadex on, who were one of the, really at the time, the only CFTC approved binary options exchange in the US. And they used to have stuff like crude oil movement and index movement and FX and all the stuff you'd expect, gold. But I used to talk to them about this stuff. I would say, hey, have you ever thought about or tried to have election stuff or sports or any of this kind of stuff, best picture, any of that kind of stuff? And they always said, yeah, that would be cool, but the CFTC would never allow it. But apparently the CFTC is allowing it here on this Kalshi.com. I'm looking at their homepage, Dan. They have all sorts of ridiculous stuff, not just the things you might expect, like Fed funds rate and things, next Fed rate hike, but also how many university presidents will be ousted before 2025. The number of rate cuts this year. Is Cillian Murphy going to win the Oscar for Best Actor? He's right now, by the way, listeners, 72% probability, which again, these binaries are priced the way they should be, 0 to 100, reflecting the probability of the event going to occur. So that's the right way. That's why CME is adjusting their binaries right now, their event contracts. They were doing them a 1-for-5 multiplier. They were pretty much 1 through 20, and you had to multiply that number times 5 to get the probability. It was nonsense. They realized this is the way to do it, so they're adjusting their binaries to line up like this as well. Is Oppenheimer going to win Best Picture? 89% chance. So it's roughly 89 and about a dime or so on the no side. So yeah, that's the kind of markets we're seeing out here. Now, a couple of things leap to mind for me, Dan. When we think binaries, we think very short term, right? Within a few minutes. But a lot of these I'm looking at here, number of university presidents ousted before 2025, or even the Best Actor. These are longer term trades. Best Actor, we're not going to know, I don't think, for at least a few weeks. The presidents, that's pretty much a 1-year trade. So these are not binaries the way you typically think of them. They're not going out in a couple of minutes. So maybe that's one of the ways they were able to sneak by CFTC approval, a little bit longer duration trade. But again, I'm not endorsing this. I haven't played around with this platform. I know very little about them outside of the conversations that I've had. But apparently they have at least gotten approval to offer these markets here in the US. But I do need to do a lot more digging. Dan, and now that you had a chance to look around here at a little bit of the websites, what are your thoughts on this thing?
Well, I just texted the link to my wife and her friend who are like all about the Oscars. I think they're more about the red carpet. I don't know if we can bet on best dress at the red carpet or anything. Yeah.
Who wore it the best?
But yeah, it's pretty cool, man. Yeah, I'm actually getting hung up on the Oscars one. But
Dan's gonna throw some money down on Cillian Murphy, I think. Which way you going?
Yeah. Well, yeah, I mean, Bradley Cooper was pretty darn good. I don't, there wasn't actually like a story in that movie. It was poorly written, but he was freaking amazing in Maestro.
Now I am looking here. They do have some shorter duration stuff, like highest temperature in Chicago today. That expires in 9 hours. So they got some weird stuff. Highest temperature in Austin today. That expires in 10 hours. So they do have some nearer dated stuff. I don't see anything that's going out in like a few minutes let's see, click on the closing. Yeah, I click on the closing tab and all their stuff is going out. The closest stuff is going out. It's all temperature related and it's all going out in 9 hours and 32. You can also bet on Biden's approval rating for today. That also goes out. And man, these are some crazy things. So yeah, this is kind of, I don't know if you know this, Dan, but early on in my trading career, when things were quiet on the trading floor, I had a nice side hustle making futures markets on opening weekends for blockbuster movies. Guys would come up to me. They would come up from across the floor and say, hey, what's your opening weekend on whatever it was at the time? Spider-Man, stuff like that. And I would say, I don't know, 75 million at, I don't know, 93 or something like that. And they come in and say, okay, at 80, and I buy them. And these were futures. So they were pretty, you could have a good hit or get run over sometimes. And then, guys would start calling up from CME, say, hey, what's your market on this? They would try to arb me against other guys. It was funny, but I had a good little side business going into this, to the point where after I left the trading floor, I did investigate this type of thing. I know Cantor Fitzgerald looked into doing the Hollywood Stock Exchange. They ran into the same issues, is that the regulators said, you know what, this stuff is so easily manipulated that you can't. I'm guessing they were trying to do it around opening weekend grosses, and that's the kind of thing I guess they said they can manipulate. Apparently, they're okay with Best Picture. I don't know. So there is some delineation here for the regulators that I am missing that has allowed this to slip through. But again, I need to do a lot more diligence. Sounds like Dan's going to be throwing a lot of money down on Best Picture soon. So we'll have to see how that trade. When are the Oscars again?
Early March, first or second week of March.
Okay, so we got a couple of weeks for these. So yeah, time for Dan to get his trade. The next week when we talk on the show, Dan, I will expect you to regale us all with your entire Oscar suite of bets. So you ready?
Yeah, and some of this stuff, like the highest temperature in Chicago today, like it says, it's because like the underlying has to be like locked down, unarguable.
Yes.
This says outcome verified by the National Weather Service. So, I mean, I don't know. Is that like a single unarguable number? I don't know.
That's the question I have for a lot of these. Is this like just at O'Hare? It's got to be one weather station. You can't have an aggregate, I'm assuming. So yeah, I don't. Oh, it's at Chicago Midway. The temperature recorded at Chicago Midway is greater than 65 degrees, according to the climate report. Then this resolves to yes. So there we go. So it is at Midway. It is one weather center. So yeah. Again, listeners, caveat emptor with this. I have not had a chance to play around with it. They do say they are approved by the CFTC. I have had some behind-the-scenes scuttlebutt that they are legit, but I have not played around with them myself. So intriguing stuff. If you, or maybe even your wife, if you wanted to look for a way to get your significant other maybe more into the, shall we say, trading side of things, maybe this might be a good gateway drug for that, Dan. Yeah, Dan, you got to look for the who wore it best on the red carpet. And then that'll really get all of the significant others in a tizzy for this one. Color me intrigued, Dan. What would you say for yourself?
Yeah, like this is pretty crazy. Like the what was the Meissner effect? Its room temperature is confirmed at room temperature this year. Like there's some nerd stuff going on here, man.
The amount of Arctic sea ice. I mean, TSA check-ins for the week of February 19th to the 25th. Above 2.3. Who would even think to wager on such a thing? I guess if you're a TSA guard and you see those numbers coming in, you're like, oh, I got to hit on this.
Hey, did you guys, when you were on the floor, we in our pit, we did this. It was like a March Madness futures betting system where like you basically, I think like how many teams are there? 64, right? So if there's 8 guys in the pit, everybody picks 8 teams out of a hat, and they all start as $1. And at the end, one of them is going to be worth $64. And then you just like buy and sell them like futures.
Yeah, we used to do that. People used to like put together like baskets. You could buy all of the bottom tier seeds for like, $1 or something, see if any of them hit kind of thing. Yeah, we used to do a bunch of that kind of stuff as well. Traders, there's no shortage of things they would make markets on. Chicago snow was a big one, a lot of things. But yeah, I was the lone guy making movies. I like to take credit for all this that has come since then, Dan. All right, let's keep rolling here. Let's go out to, I like this handle, McMaster. You get the handle award of the week. McMaster says he has a question for OBC. Well, you passed the first test. You sent it into the right show. He says, hello from Kansas. Well, Hello back at you. I know we have listeners in Kansas. I see the numbers. I don't think anyone has ever shouted out Kansas on the network before. So there you go. McMaster, you are the first. You get the pride of place. We get shout outs from all over the place. India, Germany, obviously, China. Never Kansas before. So there you go. Pride of place for Kansas. He says, I kind of wonder if you can speak on the overall level of skew across all equities. I'm not talking about just SPX, but across a broad cross section of the market. Does it stack up to what we saw a few years back in 2021? Dan, I have some thoughts on this. This is the question we've been hearing a lot anecdotally from people, so that also says something to me about this. But where do you fall on this, sir, compared to the 2021 meme stock days?
Well, I mean, as much as when I was trading on the trading floor, I had the tools to track this on a regular basis, and it was always on my radar. It is without manually tracking this and really paying attention to it. It's a little hard to track, and it does convey valuable information. But there's a million things that convey valuable information, and so you have to just pick your poison. So I can't give a really intelligent answer to this. I wish I could. I wish somebody developed some sort of wonderful tool that would tell us this, but I don't know.
Luckily for you, I have an answer, Mr. Dan. Are you ready?
Yeah, let's hear it.
This is something we've been talking about a lot. We've been getting questions about this a lot. A lot of people have been saying anecdotally they think we're starting to threaten those levels again. You start going into individual products, of course, like some of the major indices, some of the wild ones like Russell 2000, right, Dan? You're starting to see in the near-dated products, the calls, the near-dated expirations, the calls are now bid. They're bid positive skew to the calls. So it's crazy. So we're seeing it in isolated pockets of certain products out there. The S&P, you could argue, is starting, the puts are not as bid as they have been. Well, maybe the last couple of sessions has changed that a little bit, but coming into this week, that was certainly the case. So you can look at the S&P, but also, luckily for you, and again, I was talking about this with our buddy, the Flowmaster, on the option block last week, and he was saying, they're looking at crunching this data over there at SIBO a lot right now because they're hearing this question as well. And then one of his compatriots, Mandy Zhu, used to be at Credit Suisse, I believe, now works for SIBO as their kind of macro volatility strategist, I suppose. She just put out a report just last week saying the title of it was exactly this. So single stock skew back to 2021 meme stock era lows. So very intriguing. Again, gets exactly to your question here, McMaster. She puts a bunch of data in here. I'll just summarize it for you. You should be able to find this on the SIBO website. Maybe not. Maybe it's only exclusively for people on a certain list. But if you can't find it, hit us up, McMaster. We'll see if we can send it to you. But she mentioned implied vols continue to grind lower as markets rally to new all-time highs. Again, this was as of last week, listeners, so it could change a little bit this week. With every asset class vol now trading in the bottom quartile on a one-year look back. So you go back and look 1 year, vol across the board has pretty much come in. Mentions FX, a few other things. We'll skip over that. She gets into equity vol. With equity vol, Russell vol remains a standout. Again, that's what I was saying. With the RVX, which is the VIX of the Russell 2000, versus VIX spread trading in the 88th percentile. So again, probably no surprise there. Small caps are kind of just going crazy these days. So small cap vol looking pretty juicy, especially in comparison to VIX right now, in close to the 90th percentile for that spread. Again, if that's not a spread you knew existed, go look up RVX. It's a pretty fascinating product, even though it doesn't really trade anymore. She also mentions, while index skew has been flat for the majority of the past 2 years, what stands out is the more recent decline in single stock skew. Again, this gets back to what you were talking about. What was it, McMaster? It's the S&P top 50 single stock skew. 3 month, she says, skew here remained extremely elevated throughout 2022. Again, no surprise, we were selling off there. By the way, by elevated, they mean premium to the puts, discount to the calls, and we were selling off a lot in 2022, so no surprise that the puts were kind of bid. Even as index skew fell to a record low. Again, they have a whole chart of this as well, which is kind of fascinating. That divergence has normalized over the past 6 months as single stock skew has seen a dramatic flattening. Now fast forward to now, absolute levels, again, of single stock skew are now approaching the extremes we saw in Q1 2021 during the height of the meme stock era. The flattening in skew, which again, puts getting less bid, calls getting more bid. As she says it here, as a function of falling demand for puts as well as elevated demand for upside calls. So don't let that nomenclature confuse you, listeners. You hear skew is lower. Well, that means it's not as high. No, people usually key around skew to the put wing. So when they're talking about lower skew, they mean less bid for the puts, but that could also translate into a higher bid for the calls. And that is kind of what we're seeing out there right now. So, and they have also a great chart. You can check out this report if you want, listeners, showing index versus single stock skew. You can see that huge divergence here that she references back in 2022. You can see how they're now kind of moving in lockstep again, which is also fascinating. So Dan, not just anecdotally, but looking empirically now, it seems like we are starting to threaten those levels again of the meme stock 2021 era. What do you say, sir?
Yeah. So basically, to sum up for everybody else, basically what this means is that the puts are not as expensive relative to the calls, because typically puts are much higher than calls, which is interesting. Just kind of going back and looking at, I actually have this sitting in my inbox. I just haven't looked at it yet. I'm going to have to go back and look at that and see if there is any potential leading indication of that, see how smart the market is these days. I know there are definitely a lot of cases, and it was more prevalent in the past, where you look at the options and it was usually a counter indicator, where like when people are selling puts, you want to think about buying them. But it's pretty interesting stuff, especially since both, looking at this chart here, especially since both the index skew and the single stock skew is so low.
Yeah, that's what I really first started noticing was the skew in the SPX and just the E-mini S&P options, right? Those started to look kind of, puts not that expensive. And then the calls starting to look a little bit juicier, which you don't see out there too often. Then we started hearing all the anecdotal questions from listeners of this network saying, hey, are you seeing this? Usually it was around a bunch of individual names. So usually when all that stuff starts coming in as well, Dan, I start saying, And then, I was taught, some people have been pointing it out on our pro Q&As, this exact thing, that they are starting to see this again. And then talking about it, I should say, with the Flowmaster last week and him talking about crunching the data, and now them doing that and crunching this data over there at SIBO. It does seem, not just anecdotally, but now empirically, Dan, that maybe not quite to the lofty highs of that, but we're starting to get there, Dan, which again is intriguing. And also, I want to, back up what Dan said. That doesn't mean you should run out and buy all these calls. In fact, if anything, it could be a contrary indicator. It could mean retail always sometimes the last of the party, right, Dan?
Yeah, that is definitely the case. And, it makes me wonder. I mean, did the institutions buy early and now it's retail buying? I've definitely heard some speculation on that, but I don't know. That's probably a good question for Henry.
That is a good question for Henry. Maybe I'll put it to him tomorrow when I talk to him. But also heading into, and that goes back to what we started the show with, NVIDIA earnings. That could be the apex of all of this, right? Everyone's been buying these calls in anticipation of NVIDIA. And let's say NVIDIA, burst the balloon tonight, Dan. They set off this cascade effect. Then we could point back to this moment and say, hey, we got back to those 2021 levels, and then that was it. We just fell off a cliff after that. So, yeah, I mean, definitely this data is useful. You should understand it. You should look at this report. I would not say it means run out and buy all the calls. I think it means this might be a market. You might want to be very cautious, actually, of course. And again, just look at what we're talking about after the bell today, NVIDIA. This could be the mother of all canaries in the coal mine, Dan. So we had a fun show. We went all over the place today. Broad market skew. We talked about NVIDIA. We talked about after hours trading with options again. All sorts of fun. We gave a shout out to Kansas, because who doesn't love Kansas, Dan? So a lot of fun on the show. But before we go, Dan, where should folks go if they want to check in with all things MTM, sir?
Oh, we're easily found on the interwebs. MarketTaker.com, 2 T's in a row. And we're glad to help Options Bootcamp listeners. We love you.
Check them out, MarketTaker.com. Don't forget the second T for Theta. Hope you all survive the ride that is NVIDIA tonight. I could I could definitely see an argument for maybe keeping some of your powder dry ahead of it. Or if you are going to trade around it, maybe not trading in directly the NVIDIAs, but some of the ancillary things that are out there. Of course, VIXs and UVIX, maybe trying to get ahead of a vol increase or a vol decrease. Things like that that are a little bit more manageable than whatever the market gods have in store for NVIDIA after the close. So yeah, fascinating stuff. Let us know what you folks are up to out there. Oh, I didn't even check in, Dan. I have to check in on our flash poll. Let's see if our producer got it out in time. Really quickly. All right, Dan, yes, we had the flash poll really quickly before we get out of here. We asked our audience, are NVIDIA earnings bigger than the next Fed announcement to you? What do you think they said, Dan? Yes or no?
I'm going to say greater than 50% said yes.
Yeah,
sure.
Almost exactly the same numbers as our other poll. 64.3% for yes, 35.7% for no. Again, that's a flash poll, listeners. That'll be done pretty much by the end of this show. So if you listen on the podcast, you missed it. That's why you got to be over there at Options voting in. If you're hanging out in the Pro, we'll be back in a few minutes with our buddy, Mr. Oatman. No, that was last week. We'll be back in a few minutes with our buddy, the Director of Risk, to tackle all of your questions. A lot of risk, a lot of concern, as evidenced by your cues here. We're going to tackle a whole bunch of them coming up on the Pro Q&A session. Get on over there. TheOptionsInsider.com/pro is the place to go. Then I will be back tomorrow with our buddy, the Flow Master. Maybe we'll talk about some of this Skew fun. I'm sure we'll talk about NVIDIA. That'll be tomorrow on the option block. After that, of course, we'll get into all the madness going on in the world of futures options on TWIFO. Back again on Friday to carve up the volatility beast that has been this week over there on Volatility Views. And then after that, for a little bit of pro fun, once again, we come back for options oddities. The Rock Lobster and I were talking ourselves into some trades earlier today, so we'll see how those play out on Friday. Then, of course, back again next Monday with the option block and the crypto rundown all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody. Before we get out of here, let's go to this last one. This is kind of a fun one. Okay. Dan and I were just kind of discussing this on Options Bootcamp. I thought it'd be fun to kind of throw it in here as well as a final last little palate cleanser for the show, Brian. This comes from Asher. He says, hello, what can be done by an options trader when a stock makes a massive move after the close like LYFT did last night? Can I make any options trades? We all know the answer to that. The answer is no. Right. But we were kind of debating, too, on the show. You know, it, kind of the wild card I would have for this, for me, is the stock side. Because obviously you could sell this LYFT was at $12. It shot up to 20 in the after hours, then back down to about 14 or so. So if you had the calls, you watched them go from 1 to 8 to back down to like $3. But you could have obviously sold stock there at the 20 handle if you could find it in the after hours, right? The question then becomes, and this is why I think you're good to answer this as a broker guy, a former broker guy. You know, it probably varies by broker how successful that trade is going to be, right? Because how many brokers are going to see the calls as offsetting? How many are going to give you full margin to go short? You know, so let's say you have a 10 lot. They're going to let you sell 1,000 shares against it at 20, or they're going to margin you to hell because you're shorting shares in a stock that's exploding in the illiquid after hours and they're freaking out, right?
Right. And the answer is it depends on every broker. Every broker is going to treat that differently. It's all about how they want to manage risk. I mean, there are a lot of brokerage firms that just don't even want you to buy a call on the last day. Like they're worried about buying a call on an expensive underlying and getting exercised on it, not having the capital. So so the answer really is it depends. But you know what happened with LYFT, right? They had a typo in their press release.
That was fantastic. I've never seen the typo. I've seen other things drive stocks, and I've never seen a typo in the earnings call before drive it. They 10x'd their EBITDA, I believe.
Yeah. Well, I think their forecast. I don't know. I don't know exactly. I know that it was they added a 0 to 50, and it was 500 instead of 50, and I remember that. But with that said, I guess there's an interesting, I've never really thought about it, and I not necessarily would recommend doing it, but if you buy a call, you can exercise after the market if you want. You do got some time to be able to do stuff like that. Or you can just let it go away. So if you bought a call option, so I'm thinking out loud here, Mark, right? So like if I buy a call 5 minutes before the close, and the market runs up, I could exercise that call, buy the stock at the strike, and then sell it short in the after hours, right?
That's true. You can do that. That's one thing we
Right.
didn't discuss on the show. Again, that's going to be down to timing. You got to get in there quick. They usually make you call your broker for that, right?
Right.
So that's gonna
and
be-
brokers aren't. You got to make sure your broker
Yeah.
knows that you're doing it, and I think that if you did it a few times, they'd kind of be like, "Hello." Yeah.
You're going to see that stock at LYFT is at 20. You're going to pick up the phone. You're going to call your broker. You say, I want to exercise. By the time it all gets done, the stock's back down to 12 again. And you're like, wait,
Right.
no, I don't
And
want
you're
this stock
selling it. So
anymore.
it's a lot. It's a risky trade.
Yeah.
But that would have worked.
Yeah, that would have.
You know,
That's
if
right.
you would have pulled it all off, that would have worked.
That would have worked.
Yep. And you've seen that in OEX. Remember the old American style OEX? We used to always get people that would call up and want, because they would see the box. Remember the good old boxes?
Yeah.
The box would trade at what looked to be free money, but it never was, because in the OEX, they were American style and they could trade the futures against them and yada, yada, yada. So people would try to execute them. We'd have to go in and stop them and say, you don't understand the risk of this trade, over and over again. But that was the reason why that would trade at that discount to parity, I guess, is a best way to say it, is because they could be early exercised and the futures trade nonstop. So people could exercise them. And usually if that was happening, there was something funky that was going on. It never worked out. Let's put it that way.
Yes.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.